Watch video 53 on Chapter 11, Mutual Fund Scheme Performance from the Workbook for NISM Series 5A, Mutual Fund Distributors Certification Examination, and review the multiple choice questions and answers. 1. What is the focus of relative return comparisons? A. Absolute returns. B. Benchmark performance. C. Risk-free returns. D. Peer group performance. Answer: B. Benchmark performance. 2. What indicates outperformance by a fund manager? A. Lower return than the benchmark. B. Higher return than the benchmark. C. Same return as the benchmark. D. Negative tracking error. Answer: B. Higher return than the benchmark. 3. What is a weakness of relative returns comparison? A. It does not consider historical performance. B. It does not account for risk levels. C. It is difficult to calculate. D. It requires sophisticated software. Answer: B. It does not account for risk levels. 4. What is the underlying principle of risk-adjusted returns? A. Returns should always be higher than the benchmark. B. Returns must be compared without considering risk. C. Return ought to be commensurate with the risk taken. D. All fund managers should earn the same return. Answer: C. Return ought to be commensurate with the risk taken. 5. What does the Sharpe ratio measure? A. Return per unit of market risk. B. Risk premium per unit of total risk. C. Risk-adjusted return based on volatility. D. Historical performance of a fund. Answer: C. Risk-adjusted return based on volatility. 6. What is the formula for calculating the Sharpe ratio? A. Return, risk-free rate, divided by beta. B. Return, risk-free rate, divided by standard deviation. C. Return plus risk-free rate, divided by beta. D. Return, benchmark return, divided by standard deviation. Answer: B. Return, risk-free rate, divided by standard deviation. 7. What is the Trainer ratio used for? A. Measuring risk-free returns. B. Evaluating performance without risk adjustment. C. Measuring risk premium per unit of market risk. D. Comparing equity and debt schemes. Answer: C. Measuring risk premium per unit of market risk. 8. What does a positive alpha indicate? A. Underperformance of the fund manager. B. Outperformance of the fund manager. C. Equal performance to the benchmark. D. High risk in the investment strategy. Answer: B. Outperformance of the fund manager. 9. What does tracking error measure? A. The return of a scheme. B. Consistency of a fund manager's outperformance. C. Historical performance of an index. D. The risk-free rate of return. Answer: B. Consistency of a fund manager's outperformance. 10. What is the ideal tracking error for a consistently outperforming fund? A. High. B. Low. C. 0. D. Negative. Answer: B. Low. 11. According to SEBI guidelines, what must AMCs conduct periodically? A. Random audits. B. Fund manager performance reviews. C. Risk assessments. D. Investor surveys. Answer: B. Fund manager performance reviews. 12. What is the purpose of a scheme information document, SID? A. To provide historical performance data. B. To offer investment advice. C. To disclose performance data annually. D. To evaluate risk-adjusted returns. Answer: C. To disclose performance data annually. 13. What does the risk-o-meter indicate? A. Risk-free rate of return. B. The risk to the capital invested. C. Market volatility. D. Investment holding period. Answer: B. The risk to the capital invested. 14. What does the cumulative returns data help assess? A. Historical performance only. B. Fund managers' strategies. C. Ability to meet investment objectives. D. Market conditions. Answer: C. Ability to meet investment objectives. 15. What type of data is included in fund fact sheets? A. Regulatory changes. B. Funds objective and performance. C. Only historical returns. D. Personal investment advice. Answer: B. Funds objective and performance. 16. What is the impact of inflation on corporate profitability? A. It has no impact. B. It typically increases profitability. C. It can reduce demand and profitability. D. It only affects interest rates. Answer: C. It can reduce demand and profitability. 17. What does the term beta refer to in the context of investments? A. The risk-free rate of return. B. A measure of a stock's volatility compared to the market. C. The historical return of an investment. D. The average return of all mutual funds. Answer: B. A measure of a stock's volatility compared to the market. 18. What is the significance of the Sharpe ratio in fund evaluation? A. Higher Sharpe ratio indicates higher risk. B. Higher Sharpe ratio indicates better risk-adjusted returns. C. Sharpe ratio is irrelevant for debt funds. D. It measures only absolute returns. Answer: B. Higher Sharpe ratio indicates better risk-adjusted returns. 19. How often must the scheme performance numbers be updated in the SID? A. Monthly. B. Quarterly. C. Annually. D. Biannually. Answer: C. Annually. 20. What does an increase in government spending typically indicate? A. Negative economic growth. B. Positive economic growth. C. Higher interest rates. D. Decreased fiscal deficit. Answer: B. Positive economic growth. 21. What is the role of AMFI's website regarding mutual fund schemes? A. Providing investment advice. B. Disclosing scheme performance data. C. Offering tax-related information. D. Facilitating online investments. Answer: B. Disclosing scheme performance data. 22. Which of the following is not a metric analyzed in fund fact sheets? A. Corporate results. B. Inflation levels. C. Fund managers' personal investments. D. Changes in interest rates. Answer: C. Fund managers' personal investments. 23. What does a fund's performance relative to its benchmark indicate? A. Only absolute performance. B. Consistency in management style. C. Effectiveness of the fund manager. D. Market conditions. Answer: C. Effectiveness of the fund manager. 24. What is necessary for an effective comparison of Sharpe ratios? A. Comparison of all mutual funds. B. Comparison of comparable schemes only. C. Comparison across different asset classes. D. Historical performance data. Answer: B. Comparison of comparable schemes only. 25. Which metric uses beta to measure risk? A. Sharpe ratio. B. Alpha. C. Trainer ratio. D. Tracking error. Answer: C. Trainer ratio. 26. What is the significance of low tracking error? A. It indicates high absolute returns. B. It suggests the fund consistently outperforms its benchmark. C. It measures historical volatility. D. It reflects high market risk. Answer: B. It suggests the fund consistently outperforms its benchmark. 27. Which statement is true about the relationship between risk and return? A. Higher risk guarantees higher returns. B. Lower risk always results in lower returns. C. Return must justify the risk taken. D. Risk has no impact on returns. Answer, C. Return must justify the risk taken. 28. How does SEBI regulate AMCs? A. By setting minimum investment limits. B. By mandating periodic performance disclosures. C. By approving all fund managers. D. By controlling fund expenses. Answer, B. By mandating periodic performance disclosures. 29. What is the purpose of performance disclosures by AMCs? A. To attract new investors. B. To evaluate the market. C. To help investors make informed decisions. D. To comply with international standards. Answer, C. To help investors make informed decisions. 30. Which of the following is not typically included in the fund fact sheet? A. Fund's investment strategy. B. Fund manager's biography. C. Economic outlook. D. Performance data. Answer, B. Fund manager's biography.